Good morning, and welcome again to the 2012 Opportunity Finance Network Conference. My name is Dan Letendre, and I manage the CDFI investing and lending activities at Bank of America. As Donna mentioned, we are again the lead sponsor at this year's conference. We've been the lead sponsor for the last 6 years because we know that this is the signature event in the CDFI industry. But our relationship with Opportunity Finance Network goes far beyond just sponsoring this conference each year. Time and time again, OFN has helped us build programs and tactics to provide more capital to more CDFIs in more places. It was maybe 5 or 6 years ago that we were looking to expand our portfolio in small business CDFIs, particularly in our Western market, and we turned to OFN, providing a $10 million investment into Opportunity Finance Network, and they in turn took the capital and on-lent to a number of CDFIs in the small business sector that we didn't know as well and wouldn't have been able to reach. It was a successful program for us, and we hope for the CDFIs. But what we learned from that, reaching out to new CDFIs, the challenges we understood as a result of that program set the stage for later programs as well with CDFIs, including our most recent program, the Loan Loss Reserve Grant Program. Over the past 2 years, we've provided loan loss reserve grants, capital grants, to CDFIs to serve as the loan loss reserve for which the SBA, through its SBA microloan program or the Community Advantage program, will lend $10 for every $1 that we provide as a grant. To date, we've provided $12 million to 119 CDFIs in all 50 states. And those CDFIs took those loan loss reserves and it qualified them for $120 million from the SBA in low-cost, long-term capital. You know it's 10 years, effectively 0% interest rate, limited recourse to CDFIs, among the most valuable capital that's out there. And then it was a couple years ago, in the depths of the Great Recession, when liquidity at CDFIs was drying up and a number of investors were all getting nervous. We turned to OFN again, and Opportunity Finance Network hosted a series of investor roundtables that pulled together all of the CDFI investors so we could sit face to face and understand the challenges that each of us were facing and the challenges and the opportunities that CDFIs were facing. And it was through that series of sessions and in working with OFN that we got the confidence to be able to announce in 2009 the deferral of all CDFI principal payments in our portfolio if CDFIs wanted it. They could take the principal that was owed to Bank of America and roll it over and make new loans as opposed to paying us off during that period of tight liquidity. And then again last year, we were looking to launch a program of energy efficiency finance to provide capital to retrofit affordable housing and charter schools and primary health care facilities to reduce the energy usage and to make the operating the buildings more efficient. We turned to OFN when we were making selections through Mark Pinsky helped us select 9 CDFIs to receive the $55 million in low-cost long-term capital, 10-year money, 1%. And in addition, to provide $5 million in operating costs to make the program go. Time and time again, the OFN has been there to help us figure out the challenges that CDFIs face and figure out ways to provide more capital to more CDFIs in more markets. I hope that the Opportunity Finance Network staff, sometime over the next 3 days, takes the opportunity to stop by the Bank of America hospitality room just outside, because in it we have the information on our portfolio. 240 CDFIs right now in every state in the country. We now have a portfolio of well over $1 billion to those organizations. Our portfolio would not be as big or as broad and in as many places if it were not for the work and help of the Opportunity Finance Network team. Not just because of the programs and tactics they've helped us to design over time, but because of the standard of excellence and the culture of performance that OFN members have come to represent. Please join me just for a moment in thanking, because they don't get enough thanks, OFN and the OFN staff for everything they mean to our industry. This is my 16th or 17th consecutive OFN conference. I don't miss them. And in the past few years, the visit to the OFN conference for me has been a moment of reflection where I can think back on what our CDFI business has been in the last year and what the challenges and opportunities in the coming year might be. And this year, in coming to San Antonio and thinking about our business, I really began to think about just how lucky a guy I really am. I get to work exclusively with CDFI clients. Me and my team do nothing else but finance the most innovative, creative financiers in the field of community development. I get to wake up every morning and work on the most interesting and challenging and important issues facing low-income communities. How do we get more capital to underserved small businesses? How do we provide more financing to individuals who want to buy homes? How do we provide more capital to affordable housing, to charter schools, to primary health care facilities, all in low and moderate income communities? And I get to work with the biggest and best CDFI team in the country. The Bank of America CDFI team is now 12 individuals focused exclusively on financing CDFIs. Some of them, like Susan Harper in our San Francisco office and Katja Shirley in our Chicago office, started at CDFIs, and they understand the challenges that CDFIs face from the inside. Other individuals like John Paul Campbell in our Florida office and Susan Winstead in our Wilmington office are CDFI generalists with a great deal of experience in financing all types of CDFI activities. And some of our team members have recently launched new programs. They've become subject matter expertise in particular disciplines affecting CDFIs. Susan McDaniel in our Charlotte office has rolled out a program now focusing on CDFI banks and CDFI credit unions. CDFI banks and credit unions make up a third of the CDFI industry. Not enough investors are focusing on that segment and all that it can mean. Amy Brusiloff launched our energy efficiency retrofit program I mentioned. She was the driving force behind the $55 million in low-cost capital and $5 million in grants, and is hosting 2 sessions tomorrow. I encourage you to stop by and listen into that work. And Charlie Henderson, the driving force and energy behind the Loan Loss Reserve Grant Program. The 119 recipients of that program don't need to be introduced to Charlie. I don't know exactly where you're sitting, Charlie, but I think there are a few hundred CDFIs that'll be looking for you right after the break. I hope you brought a lot of business cards. One of the other neat things about having a portfolio with 240 CDFIs is it gives us the opportunity to have a window, a large sample, a window into the CDFI industry. And so as I close my comments, I'd like to offer you a little bit of the information and data that we see on the state of the CDFI industry from a financial perspective. When we look at our 240 CDFIs, across almost every financial measure we can see, CDFIs are strong and they're healthy. If we look at CDFIs today and compare them to 2007, 2008, I'll use 2008 as the example, CDFIs today are financially stronger than they were before the Great Recession, before the crash and the Great Recession. If you look at the net assets of CDFIs right now as opposed to 2008, CDFI net assets, or the net worth and equity of CDFIs, is now up 7% from pre-Great Recession levels. We use a number of measures on measuring income and self-sufficiency at CDFIs, and those income levels are now 5% higher than they were in 2007. Because of the growth of the capital base of CDFIs on the equity side, the leverage at CDFIs has actually shrunk. And employment in CDFIs in our portfolio is now up 12%. There's 12% more people, staff at CDFIs now than there were in 2007, 2008. Higher net assets, higher income, lower leverage, more staff and employment. I only wish that we could all say the same thing about the low and moderate income communities that we all care about. If we look at that data, it's a very different picture. If you look at the survey of consumer finance that recently came out and compare the current situation of low and moderate income families today versus 2007, 2008, look at the same measures. If you look at the wealth, the net assets of low and moderate income families today, it's almost 30% below where it was in 2007. Income levels, median family income across the board, is down 5% from 2008 levels. And although we've all heard about deleveraging in our economy, because the net worth has fallen, because the wealth of our low and moderate income families have fallen so much, leverage is actually up among low and moderate income households and families. And employment, well, we know it's not up. Unemployment rate we hear 7.8%, but you know in low and moderate income communities and in minority communities, that number is close to twice as much. Wealth down, income down, leverage up, employment down. I think the only positive thing is that CDFIs today have never been stronger and more ready to help. And low and moderate income communities have never needed that help more. Our low and moderate income communities are going to need the capital that CDFIs can provide in order to rebuild. And I know that CDFIs are going to need capital from investors, but not just more capital, different capital. Because loans made to you on a term of 3 or 4 years on a floating rate basis with some margin over LIBOR or Eurodollar rates isn't the kind of capital that you're going to need. It's long-term fixed rate capital. We know that, and we start with that in our program-related investment portfolio, but our industry is going to need more than that. I turn to the Small Business Administration Program, the Community Advantage Program, as one very good example of the direction that I hope we can move to more. The SBA allowed in CDFIs to become 7A lenders and provide the same guarantee that they provided to banks, opening up secondary markets and capital markets to CDFIs under that program. I want to congratulate and thank the SBA for all their work in welcoming CDFIs into that program. Grady Hedges and OC and Secretary Mills, phenomenal work. But I hope we can use that example and expand to other areas. Can more CDFIs become FHA guaranteed lenders? Can we open up the opportunity for CDFIs to sell into secondary market, whether that's Freddie, Fannie, or similar organizations? And could there be a more perfect capital source for what CDFIs need than the CDFI bond program? CDFIs need more capital, long-term fixed rate capital. But not just more capital, we need more capital in more places, because as you know, CDFIs are not equally represented all across the country. When Susan Harper and our team sits in her San Francisco office, there are 16 CDFIs within a 15-mile radius of where she sits. When I sit in my New York office, there are 37 CDFIs within 5 miles of where I sit. Now I know New York, 82 CDFIs. In California statewide, there are 90 CDFIs. And I know they're big states, but so is Florida. And in Florida, there are less than 1/3 the number of CDFIs as either New York or California. If you measure it on a density basis, looking at the number of CDFIs to population, to low and moderate income population, you'll find 5 times as many CDFIs in the state of Minnesota as you do in Florida or Texas or Indiana or Michigan. We need more capital in more places. One reason why our CDFI program at Bank of America is no longer just within our community reinvestment footprint. It's not just our CRA program. We lend far outside of the CRA assessment area that doesn't fence in the where we can make loans and investments. Now I know that more capital to more CDFIs is not going to solve all of the financial problems that our low-income communities face. But the creativity and innovation of CDFIs has to be part of the solution. And so I hope that over the next 3 days, we can all meet a few more CDFIs, learn a little bit more, discuss and debate a few more of the challenges that all of us face so we can bring more capital to more places. Thank you very much.